Hello everyone, welcome to the ichimokocharts.com daily analysis for the S&P 500 for Tuesday, August the 23rd, 2011. Well, a change of trend to the upside today, and we have a candle that's made a higher high and a higher low. Fairly large green-bodied candle, which suggests that the buyers have made some significant net bullish progress on the day between the open and the close. And it's been some time since we've seen a large bullish candle as this. Previously was a week and a half ago after we had that very strong sell-off, or 2 weeks ago since we had that very strong sell-off. And today this candle has retraced probably at least 50% of the downswing that we've seen here over the end of last week. Candle before today was a doji type candle, a very small bodied candle at the end of a trend, and that did suggest that there was potential for a change of trend to the upside. We did, however, have downside price rejection on that candle. We can see the shadow, and there was some solid resistance for this market around the 1133 to 1150 region. The market today has taken out both of those areas, but has found resistance at the 1163 area. That will be very important for the market for tomorrow's trading if we are going to see the market to continue rallying. We do also have resistance offered at the Tenkan-sen, the green line here, for tomorrow as well. Now, in Ichimoku charts terms, the market is trading below the cloud and trading below the Kijun-sen, the pink line, and just below the green line, the Tenkan-sen. So that means that the market is still bearish in the long-term time frame, the medium-term time frame, and the fast-term time frame, although quite neutral in the fast term because we're trading very close to that Tenkan-sen. Now, if the market is going to continue rallying, we do have strong resistance above that 1163 region, and resistance at 1173, 1183, and then we have very strong resistance offered around the round number 1200. So that is an area that we should see the market find some downside or possible downside price rejection if we do rally up to around that area. We can see here previously when we attempted to rally off that major sell-off that the market did capitulate around that 1200 area, so we would expect that to happen if we do continue rallying. Looking at the Kijun-sen, the Kijun-sen is flat, and price action tends to be attracted back towards there. I can see that the price action was previously attracted back towards the Kijun-sen, sold off, and now we have the market rallying back towards there. So there is a strong chance that the market will continue rallying, perhaps up to around this 1200 region. To the downside, however, if we do see a change of trend again, and it doesn't look like it because we do have the bulls in control for the trading day today, and they are showing some very strong commitment. But if we do see a change of trend, then the swing low down around 1121 is very important. We have support there, and support down around the 1106 and down to the round number 1100. So very, very strong support there, and that 1100 area is the area that the market sold off to when we saw the rally in the past week. So for the next day's trading, obviously 1163 and 1173 and above is very important, but the area around 1120, 1121 is important if there is any downside pressure once again. Now let's move on to light sweet crude oil. We have a continuation of the trend to the upside in the first time frame, with this candle making a higher high and a higher low. We have had a reduction in the size of the body in this candle, and that does suggest that there is potential for a change of trend. We do still have a green-bodied candle, so the buyers once again made net bullish progress, but not as much net bullish progress as the previous day's trading. And it is somewhat of a spinning top type candle, where we've had downside price rejection from the highs, but upside price rejection from the lows. So a fairly indecisive candle, although the buyers have closed this market with control, but not very strong control. We have seen the market close above the resistance at 85.11, so that is fairly significant, and there isn't a lot of resistance above this area until the market trades to the Kijun-sen, which is at 88.16.5. Above there we have good solid resistance offered around 90 round number. Now, if there is a change of trend, obviously we do see potential for support at 84, and then no decent support until the market trades down to 80. So if there is some downside momentum for this market, then we could see 80 tested fairly soon. In Ichimoku charts terms, this market is still trading down below the cloud, so we have an overall negative bias in the big picture terms, and a bearish market in terms of trading below the Kijun-sen, the pink line, in the medium-term time frame. The market, however, is bullish in the fast-term time frame by now trading up above the Tenkan-sen, the green line here. So we do have a recovery going on with this market. Now, this market is also set up for a potential change of trend in the second time frame, where we have a higher trough, and it does set the market up for a potential series of higher peaks and higher troughs. So here we have a trough, a peak, a higher trough, and if we do take out that peak at around 89, then that will be a change of trend in the second time frame, in the medium-term time frame. So we do need to be aware of that if the market does continue rallying and test up around those areas. Looking at the Chica span here, that is trading down below the corresponding price action, so that's confirming the overall negativity we are seeing in the big picture and the medium-term time frame in this market. So for the next day's trading, obviously watch the high of the current candle, which is at 86.39, for a potential continuation to the flat Kijun-sen and a test to higher levels, potentially up to 90. But certainly watch around the low in this 84 region for a potential sell-off once again, because of some indecisive in this market, and potential test down to around 80. Next on to gold, and we can see that we have a red body candle for today's trading. The trend is still up in this market. We've had previously a series of higher highs and higher lows on each candle, so we have a trend to the upside in the first time frame. And today we've had a candle that took out the high but also took out the low of the previous candle. So some indecisiveness in this market. We have quite a volatile period of trading for today's trading. The buyers were strong enough to take out the high and test to up around the 1920 level, but the sellers also were strong enough to trade down below the previous low around the 1860 region and trade down to 1823. When the market did trade down to that to the lows, we did see the sellers lose commitment, and that coincided with the area where the Tenkan-sen is trading. And quite often when we have a market that has very solid upside momentum, we see the market find initial support down at that Tenkan-sen. And if we look back through the history here, on quite a few occasions we've seen the market find support at the Tenkan-sen. On this occasion here, this occasion here, and now here. So there is a possibility that we could see the market bounce off this level and trade to higher levels, as we've seen on 4 or 5 previous occasions in this very strong second time frame uptrend. Now, because we have this red body candle, however, we have had a change in sentiment in the market, and we have had the sellers make net bearish progress, as opposed to the buyers, where we've had 5 or 6 solid days of the bulls making solid progress to the upside. The region around the low and the Tenkan-sen is very important for this market over the next trading day, around 1819. If we do see the market trade down through there, and certainly through the 1800 round number, we could see the market testing down to the support level around the Kijun-sen, which is trading at 1748. Now, in Ichimoku charts terms, this market is bullish in the medium-term, fast-term, and long-term timeframes by trading above the cloud, the Kijun-sen, and the Tenkan-sen, and the Chica span is a long way above corresponding price action, confirming the bullishness that we're seeing overall in this market. So obviously there is potential for this market to come off. We did see the sellers lose commitment down around this level. If we do see bearishness around this level, around the 1819 level, we could see the market test down below 1800. But if we see bullishness at the start of trading, we do need to watch some potential resistance up around the 1900 area, where we did see some downside price rejection previously in this market. But there is still potential for this market to continue the trend to the upside.